Hello, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me this week is Dan Darrow. Dan is a trader. He's a moderator in the Alpha Team virtual trading floor with T3 Live, and he's been here several times before, an options specialist. Hi, Dan. Thanks so much for joining me for today's event.
Hi, it's great to be here. Thanks for having me back.
All right, Dan. So our conversation today is going to focus mostly on options. I thought this would be, a timely discussion with earnings season getting underway. So just to start off here, walk me through kind of your personal option strategy, how you use that in trading, and how you developed this over time.
Yeah, so I guess there's like 2 points. So, um, I've always felt that options are, and I think we've spoken about this on our conversations in the past, but I've always
Mm-hmm.
felt that like options are particularly suited well to events,
Mm-hmm.
just because, I mean, one of the best things about them is that risk defined, right? So the price you pay is really your risk. I mean, assuming you're not like shorting options. So when it comes to events, I mean, to me, it like options are just are suited to play in these types of catalysts. So earnings season, like you said, I mean, it tends to be a focus for me. I do like playing earnings. I know some people avoid it because of like the unpredictability they say, or it's just kind of like a gamble.
Mm-hmm.
I would take the other side argument. I'd say that if you select the right patterns, right, go with like the right setups, then you remove some of that unpredictability, right? So one of the things I like to do around earnings season is it's a little bit of technical work, but also I kind of marry it with like option pricing and to a lesser extent maybe a little bit of like fundamentals. I would say like on the list that would probably be like the lowest of what really goes into it. So I mean, compared to like some people that say, oh, like the company's doing fantastic, they're going to blow it out, right? Like that's their
Mm-hmm.
idea of like an earnings trade. They're like, oh, they're crushing it. Like I'm going to buy calls, right? So for me,
Mm-hmm.
like fundamental work probably would be a little bit lower on like the list when it comes to like an earnings play. Um, what I really like to do is like focus on those setups where I feel like I have an edge, meaning that I look at like a technical setup and then I look at the option pricing, and a lot of my strategy is what's called like volatility plays. So I focus on strangles, straddles, right? So what I'm really trying to find are those setups that are just going to exceed what's priced in. So that's why for
Mm-hmm.
me, it's not necessarily about picking a direction. It's about picking a setup that's going to exceed what is expected. So I really like focusing on setups where the technicals either say, okay, this is going to be a gigantic move. So whether that's like a stock coming out of a consolidation, bumping up into maybe key levels, sitting at a key level, and we can actually pull up the chart of UNH.
Yeah.
So this is like a good example. I will say this isn't one I ended up playing, but this is like a great example of why I think like a little bit of like chart work and also option wise it's worth like looking at maybe some names that aren't always like the most followed. So UNH was one of the big healthcare reports last week. And what was interesting about it is that actually it went into earnings right at the 450 level, which you can see from the chart was basically two-year support. So what's great about this is that it's to me, in my opinion, this is a make or break setup. I mean, the stock is at a massive two-year support level. If earnings disappoint, right, that triggers a multi-period breakdown, which you would think would lead to a sharp move lower, right? I mean, any technician that looks at a break of 450 is probably thinking this is going to be a sharp move. You couple that with like earnings being the catalyst, it adds fuel to the fire, right?
Mm-hmm.
On the opposite side, we can see from since the beginning of 2022 that every time it's touched 450, it's had a really sharp rebound, and really like those rebounds have played out over like a matter of days. Sometimes a week a little bit longer, but those rebounds carried the stock up to like 480 at a minimum on those bounces. So when I look at the technical setup, I say, okay, this is a make or break. Stocks at 450, huge multi-month, multi-year support level. And then I look at the option pricing. So going into that print, UNH was pricing in about $16 to $17, right? And to me, it says, okay, that's fair, right? That's kind of in line with what the stock has priced historically. But the setup this quarter was much different. It was much more interesting. It was, as I said, it was like a make or break report. So you can make the argument that if it breaks down, it should far exceed like a 16 to 17 point move because it's losing 2-year support. And if it bounces, well, we've seen from all these instances since the beginning of 2022 that bounces typically are good for 30 plus points in a matter of days, if not like a week, right? So if you could say, okay, the chart dictates the move is going to exceed $17, that's what the options are pricing in, like that would be like a nice setup for a volatility strategy, meaning like either you look at like a straddle or a strangle. So it's not about betting on the stock going up. It's not about betting on the stock going down. You're making a bet that the stock is just going to exceed what the option market is pricing in.
Interesting.
Mhm.
So do you feel like using options instead of trading equity in these volatile times, but also just in general, because you use options in your trading on a day-to-day basis, even when we're not in
Mhm.
earnings, do you feel like that gives you the ability to maybe put on better position size or larger position size, et cetera, without maybe having to buy so much premium in a stock? Does that
Yeah,
make
I
sense?
mean,
Like you
it
don't have to
definitely,
spend as
yeah,
much, you know?
it's less capital commitment. Yeah,
Yeah.
absolutely. So I think that's one of the reasons why people, and myself included, that that's one of the reasons why people are attracted to options is because
Hmm.
you can have a smaller account, but you could still get significant leverage, right?
Hmm.
Because for each contract, it's the equivalent of like 100 shares of stock. So even if you didn't even if you like didn't have the big account, I mean, you could still trade like a lot of like the high beta, high price names. So,
Hmm.
um, I will say that just because options are cheap, right? I mean, it doesn't necessarily mean that there's no risk involved, right? I mean,
Right.
because as is the case with like all options, there's an expiration date, right? There's a termination date. So with stock, it's like, okay, you get into something, it goes nowhere for a month, 2 months, 3 months. It's like, okay, maybe it's opportunity cost of money. I could have been doing something else, making money, but at the end of the day, you're not losing. But if you get into an option, stock goes nowhere, more likely than not, you're losing money. So
Hmm.
there's different elements to it, but I will say that especially like around events, I find options to be interesting, but also, as you say, I mean, it is like a way to like play some maybe more expensive or higher beta names with less capital commitment.
Hmm. Okay. When I got into this conversation with you, I completely skipped over what is normally my first question. I kind of
Yeah,
just
I
didn't
was waiting
even
for it.
notice it on my sheet
I
here.
was waiting for it. Yeah.
So a reminder for the audience that this is a Q&A between me and Dan, but also a Q&A between Dan and yourself. So in the chat, I have put a comment there to show you where it is. Submit your questions for Dan there. In the second half of this event, I'll ask him all of those and we'll get them answered. We want to make sure we're talking about the things you guys want to learn about. And he is, as I mentioned, an options specialist, knows, I would argue, more than most about options. So go ahead and ask your questions there for him. Okay, Dan. So my normally first question, but we'll get in here on the third, is how would you grade your week of trading so far? So give that to me on your typical grading scale in school, like an A to an F.
Yeah. So this week has actually been pretty good. So I'd give it an A minus.
Okay.
Could have done a few things better, but overall, this was a good week. And to, I guess, jump ahead of what your next question might be, what what got it really started on the right foot was Monday. There was a bunch of biotech companies, well, not a bunch, but a couple in
Mm-hmm.
particular that had data that I was anticipating, and played out in my favor. Led to like pretty nice trades on a couple of them, and I mean, it's always nice having like a good day, but it's for me, and I don't know, maybe it's just the mentality. Like I especially love having a good day on Mondays and Fridays. So Monday sets the tone for the week.
Yeah.
Friday, it's nice having a good day because you head into the weekend, like kind of good spirits. So yeah, having a really good session on Monday started the week off right, and On a whole, I'd say it's about an A minus. We'll see how these earnings settle
Hmm.
and play out tomorrow. But I think that's where we stand right now.
Okay. So back to our options discussion. Do you have a
Mhm.
favorite time frame that you like to work in when you're trading options?
Um, Actually, I like a little bit. I like a little bit of a lot of different time frames. So
Hmm.
I'm typically in a bunch of positions. So anywhere from like 5 to 15, sometimes even more.
Hmm.
So what I do like though is kind of like staggering the expiration among my positions. So I might have some that are, I mean, like literally day trades or like positions that I get in and like a few minutes later or an hour or within that day, I'm out. So those are very short. There would be some positions that I'm in for a couple days. Some positions that I'm in expiration wise for a couple weeks or a few weeks, and then there's some that are in like maybe like a month to 2 months out. So what I generally don't like to do is have most of my expiration either very short term or longer term. Just I like when the expiration is a little bit staggered because it can be kind of well, especially when it's all short term because it can be kind of manic when you're in a
Hmm.
lot of short term and you're getting like wild swings and you have to really uh like aggressively manage positions, especially if you're in a lot of positions, because I mean short-term expiration, highly volatile market, it can really have some dramatic swings very quickly. So I generally don't like to have all my expiration like lined up with one another. So I like to have like a mix of like some short term, um, some like midterm, medium term. So that'd be like anywhere from like like maybe like 3 days to like 7 days, and then stuff that's out like a few weeks to like even like a couple months in some instances.
Okay. And on that, do you trade lottos often? And for the
Yeah,
audience, just kind of
yeah,
explain what a lotto is and how you use them in your option
yeah,
strategy.
absolutely. Yeah, so I mean, lottos can be a couple different things for different people. So
Hmm.
some people refer to lottos as just options that are low priced, um, which kind of intuitively makes sense, right? I mean, you're basically paying like pennies on the dollar for a contract. I mean, if it works in your favor, oftentimes the reward can be exponential, right?
Hmm.
Um, but also some people refer to lottos as, I mean, same idea, like pennies on the dollar, but they're more of like um, just late in the week. So like these are just like short-term expiration contracts that have lost most of their value because there's not much time left, and they're looking to like trade those on like a Thursday or Friday. So on one hand, I would say like some people look at lottos as kind of like really like cheap or like low dollar bets on events. So like earnings, for instance, right? Like you could
Hmm.
look at options that are far out of the money, which would be, low priced. Obviously, the chances of them working very, very low, but I mean, also at the same time, you're not committing a lot of money to it, right? So that's like one idea of like a lotto. The other would be like, those options that, say for like Tesla or Nvidia or whatever, right? Like on Thursday, or Friday morning, those weekly options have lost a good portion of their premium because I mean there's only like a matter of hours until expiration. So people like trading those just because you know you're 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 not laying out much for time value, right? Like you're getting closer to the money, higher delta contracts. So if you do end up catching like a big move on like a Thursday or Friday with those
Hmm.
weeklies, it can really be like pretty nice returns. So um, getting back to your question, sorry, I just was going on there, but yeah, I do, I do trade them. I do trade them pretty frequently. I mean, so in both instances, so like for earnings, if I'm maybe less confident in a setup, I want to have possibly like a little bit of money at risk, right? I think there's a maybe small or I think there's a chance that there could be a gigantic move, but I think it's also like a small chance, right? That I might look at like a further out of the money option as like quote unquote lotto play, but also come Thursday, Friday, I'm definitely focused on some weeklies. Um, Especially one of the like the things I like to do during the day is like kind of like scalp news announcements, so like breaking news. So for that, it's nice, like the weeklies, like later in the week, because you're just not paying as much time value. So you can,
Mhm.
oftentimes like get like closer to the money contracts or more contracts. And for those news, it's kind of just like quickly in, quickly out, which I love. So yeah, absolutely. I definitely trade lottos during the week.
Okay. So we've talked about how you approach earnings season
Hmm.
in as a whole using options, also specific earnings. So now let's talk about some of those earnings. The big results for the week came out just a bit ago. We got reports from Tesla and Netflix, also IBM and United Airlines, plus a bunch of others, but those are kind of the four big ones today. Let's start off with Tesla. Talk about what you were seeing in the stock leading up to this release. Um, how did you play it? How did you, if you did, or kind of give me the hypothetical approach that you would take from an option standpoint uh, if you didn't play it, but kind of give you the approach.
Yeah. So I shared yeah. So let's pull up the Tesla chart. We can.
Mm-hmm.
So this is a slightly longer chart. This is going back to the end of 2021. But I mean, I think one of the things that it highlights is just how sharp and impressive of a run that Tesla's had in the lead up to this earnings release. So it's not highlighted. It's not highlighted at a specific point on this chart, but um, when Tesla last reported, the stock I think finished that specific session in the 160s. A week later, it was in the 150s. Going into earnings today, the stock, I believe, it might not have hit 300, but it came awfully close to it. So, a week removed from last quarter earnings, the stock is up basically 100% going into this report. So, and to be honest, like this, I think this is something that's going to be um, more common this quarter, because we have seen some really sharp moves ahead of this earnings season. But I personally really struggle with setups similar to Tesla, or even like Netflix, which we can talk about in a second. Just because to me it's very difficult to get a feel for what's priced in. I'm not talking about like, I can pull up the options chain. I can tell you exactly what the option market is anticipating movement wise. What I
Mm-hmm.
mean priced in is like, okay, is everybody expecting a beat? Is everybody expecting a fantastic guide, right? And if so, is there anybody, are there still incremental buyers to continue to push this higher, or is everybody long? Everybody's expecting such a great quarter, and the good news is already priced into the stock, right?
Mm-hmm.
So that's why for me, when I see a stock have like a very dramatic move right into earnings, and this also works on the downside too, right? It's just the opposite logic. Um, a lot of times I tend to avoid those,
Mm-hmm.
both because I struggle to figure out, like, is good news already priced in, but also, as the stock moves higher, typically implied volatility is expanding, right, as movement, and that often leads to like higher option pricing at the same time. So it's kind of like a double whammy, where it's difficult to read. The setup is tougher, but also the option pricing can sometimes be tougher, because as the stock movement expands, implied volatility expands, and that pushes up option pricing at the same time.
Mm-hmm.
So no, I didn't play Tesla. I was kind of like loosely tracking it while we were prepping to jump on the chat here. So I was reading through some of the metrics. I see they missed a little bit on gross margins, which I think was one of the big sticking points. That was one of the things that contributed to the stocks drop last quarter. So it seems like more of like a marginal miss. I think it came in at 18.2, and people were looking for 18.8. So we'll have to see. And this is, I mean, like this is going to be like, this is moving forward. And it might be something we discuss a little bit later. But I think one of the one of the things to really watch for this quarter is that are for leading names that might end up getting like a sell the news. So I'm not sure how Tesla's going to shake out tomorrow, but if Tesla did pull back or even just paused, right? I feel like this is going to be something we see really often this quarter, is that, leading names, maybe they don't have a blockbuster move on an earnings release, but as long as the numbers are solid, they maintain their trends, like I would just continue. I would envision like the momentum continuing, right?
Mm-hmm.
So, wait for the pause if there's like a modest pullback, wait for like the selling to exhaust itself, and then Tesla, for me, it might be something like I look at for like, like a bull trade in a couple days, or maybe like a week, right? Once it's kind of resumed like that momentum again. And this is really going to hold true for like a lot of names. I mean, I can even show you some examples actually from last week where it's, maybe the stock didn't, great stock had a huge run into earnings, great report, didn't do anything, maybe even closed lower, and then 2 3 days later it's just right back up and on its way.
Yeah. I mean, are those some of the charts you
Yeah,
sent me?
yeah,
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 we can
yeah.
talk through
So
those.
yeah,
Yeah.
so you can pull it up. So let's go with Delta first, DL.
Mm-hmm. All right. So,
Yeah, so Delta, I mean, just phenomenal run. I mean, you don't often see airlines move like that over
yeah.
like the past month. So again, I mean, another name just had just absolutely fantastic move into earnings, great quarter, really crushed it. Stock, the stock gapped up on the day of its release, pulled in, and so on my chart, the indicators, the green line is the 8 exponential, and the pink line is the 20 simple. So those are two of my favorite momentum indicators trading wise. So I place a lot of emphasis on those when it comes to like momentum setups, which in this case Delta fits into that category. So what you'll notice is that okay, right? The stock was basically up 50% over a month going into earnings. Had a great quarter. They sold the news, came in, held the momentum levels, right? So in this case, it held the 20-day perfectly, ticked back
Mm-hmm.
up, reset the trend, and now it looks like it's on its way higher again, right? Same idea for if you want to pull up JP Morgan. So
Mm, yeah.
really, I mean, this one had an even like briefer pause. I mean, you have to like use a pair of binoculars to see it. Um, but I mean, this one wasn't as dramatic of a run over the month going into earnings, but going over the 2 weeks going into earnings, it had a very sharp move. It went into the report at its year-to-date high. The red candle um, was the earnings release day, where they had a very strong print, as basically everybody expected. The stock was up, gave it back, finished flat, and then what do you know? Next day buyers came back in. 2 days later, it's at like a new high, right? And so it's just another instance where earnings, they just really weren't a material event because the stock had a fantastic move. Everybody was expecting fantastic results. The company delivered, right? There wasn't that incremental buyer there because there wasn't an element of surprise, but stock maintained their uptrend. So for JP Morgan, it held the 8 EMA perfectly. And the trend was still intact, and the trend resumed immediately after. So I really feel like, I mean, with the momentum so strong across the market and so many names up so dramatically into earnings, that this is really going to be something we see much more often, is just maybe a lack of movement on the earnings release, whether it's like a modest pullback or just a pause, right? It's really just a reset of momentum, and then once stocks get going again, just back in business.
Mm-hmm. Okay, there it is. Okay, so talking about stocks that have had major moves leading into
Mm.
earnings, Netflix is one of those. Many are out there say, this stock has been majorly overbought heading into
Mm.
today's report.
Yeah.
So you've kind of talked about how you approach stocks in that position. The reaction to Netflix is down for over 4%, $20 here in the after
Mm.
hours. Uh, I think mostly the focus is on the revenue forecast. So it's not
Mm.
necessarily the results, but it's the outlook. And I feel like that's been a
Yeah.
really big focus for earnings, Q1 earnings, but definitely here in Q2 earnings. I think there's a huge focus on outlook. So again, we'll talk through
Absolutely.
Netflix the same kind of way we talked through Tesla,
Yeah.
how you would
Yeah.
approach it
So.
if you played it,
Mm.
etc. So I'll pull up the chart for you now.
Yeah. Yeah. If you pull up the chart. So Netflix, again, like you said, I mean, just really just a fantastic run into earnings. So this is a slightly longer term chart.
Mm-hmm.
I think what's maybe a little bit more interesting about Netflix versus Tesla is just um, actually just in the last 2 days, Netflix made like a pretty significant push into the gap from the beginning of 2022.
Hmm.
So you know, it's had a huge run. It's up a lot just in the last few days, or was up a lot just in the last few days going to earnings. What was interesting from a technical perspective, which is a little bit different than Tesla, was just that you had this really obvious large unfilled gap, but it still falls into that category of it's difficult to really assess like how high the bar was, right? Like what was priced in after the move it had. I think what was also a little bit challenging for Netflix, uh, and I read a little bit about it. I think they said in their press release that they expect about 1.5 billion in cost savings because of the Hollywood shutdown. So that was
Hmm.
one of the big things like I had questions about, is just because this past week we had the actors joined the writers on strike. So reading a little bit about it, um, I don't think anybody looked at it as a very immediate impact to Netflix, because things that were already produced and rolling out, I mean, they would continue to do that, but like what they're saying, like 4 months, 5 months, 6 months down the road, that could have an impact on these content producers, because there was nothing new, right?
Right.
And because like a platform like Netflix relies so heavily on like new additions, right? Are people going
Hmm.
to be are people going to be interested in signing up if there's nothing new coming out, right?
Hmm.
So that maybe this was like thinking too far down the road, when in reality there just wasn't going to be that much of an impact this quarter. But started getting these types of things into my head, and I'm like, oh, maybe this is like, you couple that with like these thoughts coupled with the fact that the stock has had a huge run, right?
Hmm.
Option pricing to me was a little bit higher than what felt like it has moved recently. Um, so it made for a very difficult setup. But I I guess I do think that Netflix probably is similar, and falls into the same category as Tesla and some of these other names, where I'll have to see how the conference call goes on both of these. But if Netflix, right, okay, maybe the guidance was a little bit light, right? But
Hmm.
at the end of the day, I mean, I feel like Netflix has like a history of kind of like sandbagging guidance a little bit and then handily beating.
Hmm.
I think their I think I saw the subs beat by almost like 2.5 million, right? I was looking. I think they were forecast to do like 2 million additions, and they did like five and a half.
Five and a half. Yeah, 5.9.
Yeah, yeah.
Hmm.
So I think they tend to guide conservatively, so we'll have to see. But um, I again, I mean, it's momentum is so strong. I mean, unless the conference call goes really poorly, to me, it just feels like it falls into that same category where wait for the stock to settle, watch to see if it holds the momentum levels. So for me, like that's the 8 exponential or the 20-day. If it
Hmm.
does, right, look for a possible like bull reversal or a breakout or just a continuation, whatever it may be. But you know, I, I don't. I guess I don't think for a stock like Netflix they're really going to not get materially lower unless like this conference call goes really badly today. I mean, I feel like the tape is just so strong that
Yeah.
stocks, people are looking to put money to work. So a dip is viewed more as that opportunity to nibble than a reason to sell.
Hmm. Okay. Uh, the market as a whole has had, a really large run up leading into this earnings season, not just leading into earnings, but just, over the past few months. So
Mhm.
looking at this season as a whole, what are you expecting?
Yeah, I mean, I I think see it's hard. So I think right now that a lot of tech has probably gotten slightly ahead of itself, but
Mm.
I think I think a lot of tech names have also have a compelling story to tell now too.
Mm-hmm.
And that I think when the market turns into like a tape where where like a story is the prevailing narrative. So like for almost all of last year and even like a portion of the beginning of this year, it was, you know, it was all about the Fed, right? It was all about
Right.
the path of interest rates. It's about like what inflation was doing. Um, this year, even the beginning of this year, I think it was like the huge narrative, even just on the corporate level, was cost savings. Everybody was focused on what was it? What they dub it, the year of efficiency.
Yes.
Um,
The
right?
Facebook. That was Meta's Zuck's
Yeah.
whole
So
thing, the year of
yeah,
efficiency.
yeah. I mean, how often have you heard that lately, right? So
Mm-hmm.
really, what happened was like in the aftermath of Nvidia. But you can even, you know, you can even, if you wanted to pull up like a chart of like the Qs right now, you
Yeah.
could. I think I have it posted there. I mean, like what
Oh,
I think really in the
there.
in the aftermath of Nvidia's report, the, there was all of a sudden like a compelling story again, and that's given people reason to be excited, and I think that's driven like a lot of the action in tech. So you know, I, I feel like a lot of names have probably gotten ahead of themselves, but when there's a prevailing narrative or story that gets people excited, you know, you can also fall into that category of earnings are, they're important, but they're maybe slightly less relevant, right? Like if the
Mm-hmm.
company can still, you know, if they can blame maybe like a not so sparkling print, say like, oh, but you know, like the interest in our AI tools is accelerating, right? Or we're developing, or we signed a partnership with OpenAI, right? Like this is like we've seen like just instances this week where like these mega cap names like Microsoft, it was
Microsoft.
yesterday,
Mm-hmm.
jumped 5% intraday off of announcing a pricing of AI tools, and Apple today jumped to a new 52-week high after they said, you know, there was reports that they're in a race to develop like you know, AI tools as well, right? So
Mm-hmm.
like I feel like we get constant reminders day after day after day that what matters most to people right now, and that's it. So as far as earnings season, and they're sorry, the reason why I'm droning on about tech is just that I mean the impact of these tech names is just so vast, right? Like it's what's driving the indices like day after day after day. So I mean, for me, it's like, you know, you might be focused on healthcare, you might be focused on industrials or financials, right? And you know, some of those act well, some of those don't. But I mean, if you trading the SPY or the Qs or even like the Russell, right? I mean, it's hard not to really be mindful of what's going on in like tech just because it has such like a large impact on so many of these. So I don't know, I feel like that's playing into like my thinking. It's like, okay, you know, similar to like Netflix or Tesla, stocks act phenomenal. You know, you maybe the expectations or the bar just got too unreasonably high where you know, it would have been really difficult to jump over it. But if these stories still have like you know, if these stories are still intact, right? If people are still interested in the future or what they're doing or what their business is or what the AI implications are for that company, right? Like to me, like that's going to probably trump a lot of like the financial metrics that we see. So um, you know, I don't I don't want to say like earnings aren't relevant, but I think that earnings for certain areas matter less than the overall
Hmm.
story.
Yeah,
Yeah.
I would agree with that. So you're
Mhm.
talking about the market as a whole and the trends that we're seeing and the leaders, et cetera. What are the
Yeah.
key levels that you're monitoring when maybe you look at the cues, you look at SPY, et cetera?
Yeah. Yeah. So is the chart of the queue still up?
I'll pull it back up.
Yeah, let's pull it back. I think this is fantastic. So um, so as of as of one point today, the queues were actually as close to their all-time high as they were to the July low,
Hmm.
which is really probably hard for most people to wrap their heads around. So we are basically equidistant from the all-time high as we are just from the low from this month, which was 2.5 weeks ago. So I, you know, I think what's relevant level wise, right now on the Qs the is the 52 week or the all-time high. I mean, that's really, in terms of like levels on the upside, that's really it. We've blown through
Mm-hmm.
so many levels so quickly with such like aggressive momentum that that's, for all intents and purposes, I mean, like that's the last level that really remains. I mean, that's above like 400, so 405, 406 area. Um, and you know, I probably, if you had said this to me like 2 months ago, that this is where we would be, I'd probably said you'd be crazy. But now that
Mm-hmm.
we're here, I think you'd be crazy to dismiss the possibility of possibly getting up there to test it in the not too distant future, right? I mean, if we're moving in 1% clips nearly every single day,
Yeah.
right? I mean, that would put us up there. I mean, and I'm not saying it's going to continue on that path, and there's certainly you know, the possibility of a surprise, but I mean, just to think that we are literally like the exact same distance from the all-time high as we are just from the July low 2.5 weeks ago really makes you have to, you know, and start to entertain it as a possibility. So
Mm-hmm.
for, in terms of like upside levels for the Qs, like that would be it. I mean, and same idea as like all these other stocks in terms of like downside, as long as the Qs continue to hold the 8 exponential and the 20-day,
Mm-hmm.
I feel like you just continue to ride momentum. So if I see a definitive break of the 20-day, um, then that would be my point where I'd say, okay, something's changing, trend is changing, momentum is starting to get lost, and then I'd really begin to get a little bit more cautious, or probably a lot more cautious, to be honest.
Mm-hmm. This run up in the market comes while, you know, we've talked several times about this. While the Fed is tightening, they're expected to tighten again next week,
Mm,
next
yeah,
Wednesday. It's kind of like 100% chance at this point of a
90,
25
yeah,
basis point
yep,
rate hike,
99.8, yeah,
99.8. Yeah.
yep,
So, I mean, that's what
100%.
everyone expects. That's what the Fed has
Yeah.
said they're going to do. Typically, they do
Yeah.
what they say they're going to do. Anyway, this whole run up in the market, the strength in the market comes even amid that. Does that make the Fed's job harder in getting inflation down and slowing down the economy? Or is it giving the Fed the strength? The strength of the stock market plus the strength of the labor market. Is it giving the
Mm.
Fed more of a chance for that soft landing that they were hoping for?
It's a great question. I I'm I'm very curious to see how it plays out. Yeah, I I think that the rise in the stock market obviously is going to have an impact on the wealth effect, right?
Mm-hmm.
For at least for those that have that have money invested, and I think that the wealth effect has impacts in throughout the economy, right? So I mean, like big ticket items, right? I mean, if you start to see your investments outperforming, it kind of gives you a little bit maybe more confidence to go after like a big ticket item, and does that start to reaccelerate some inflation? So
Mm-hmm.
I think this has happened so quick that it's left people a little like shell shocked, or maybe not. I don't know. I mean, I think just in maybe like the small sample size, of the people I talk to, you know, I feel like some people are still in disbelief that we've come this far, and they're still expecting like a really quick correction. So maybe
Mm-hmm.
people are a little bit more cautious, right? But I mean, I think like, you know, the performance in the stock market, right? I mean, like that, you would think that that would have like a spillover effect to people's spend.
Mm-hmm.
You know, as far as like what the Fed does in reaction to that, I mean, I think they're just data driven, right? At the end of the day, I mean, this is something they've talked about and really driven home like over and over and over again, much to people's like, you know, I feel like people have been like, oh, they don't know what they're talking about. They're over, you know, they're not, they're over tightening. We're going to be like into like a recession, right? They say like they're not forward thinking. They're just reacting. But I mean, that's what they're doing, and that's what they could, you know, continue to communicate that they're going to do is like, okay, they say like we're just monitoring the data. When we see the data change, then you know we'll react to that. So
Mm-hmm.
I think right now it's like you're just waiting to see if anything shows up that starts to like show you that, okay, inflation's beginning to like reaccelerate. Although
Mm-hmm.
I will say that I have been reading, right, that I think last July's CPI reading was the high water mark right? Where that's when it was over 9%. And I do think that some people right now believe that the CPI was that last week? I think it was last week. So
Yeah.
some people believe that this CPI reading could be like the low water mark, and we begin to tick up a little bit from here. So
Mm.
we'll see how the August reading looks.
Interesting.
Yeah, yeah, I don't know. Yeah, it's going to be really interesting to see how it all plays out. But like you said, I mean, right now there's a 99.8% chance of a 25 basis point move next week. So it seems like it would be a massive, massive surprise if the Fed didn't raise rates next week.
Yeah. So it, expected the Fed raises rates. The Fed say they raise rates next Wednesday. The market reaction, do you expect that to be just pretty muted because that's what everyone expects?
I would think just on the headline release probably,
Hmm.
but then
More
usually
focus
what
on Powell.
on the yeah, exactly. So his comments and any sort of insight he provides for the path forward is really what's going to be probably the most market moving, because that's
Hmm.
where all the uncertainty is at this point. People don't know what comes next. I think one of the Fed governors had some chatter about expecting two more hikes. So one next week and then another further.
Hmm. That's what the
I think
dot
that's a
plot
little bit,
showed.
yeah.
Yeah.
So I really think at the end of the day, that's probably what's going to matter more than the 25 basis points, because that seems all but certain. But just going back to what we were just talking about, I mean, like Powell he just keeps saying it over and over again that we're data driven, right? We're monitoring the data. The labor market's really strong, surprisingly resilient, right?
Hmm.
They have the 2% mandate that they have to get inflation down. So they're just going to continue to monitor the data and until the data aligns with what they're looking for. I mean, I feel like rates are going to stay longer than people expect, or maybe it really deteriorates so fast where we do get down to 2% inflation. But if that's the case, like, what are the implications for like the economy, right? I mean, if things really begin to decelerate, if the jobs if the unemployment starts to tick up and inflation starts to crater, does that mean like we're heading towards a hard landing, right? Is that soft landing narrative still possible? So
Hmm.
we'll see.
I want to go to a couple audience questions. We'll start off with this one from Ryan. He asked, how do regional banks, KRE is the ETF, look to you now? So there was a lot of focus on regional banks in March with, the whole breakdown in regional banks. And that was kind of what everyone was saying was what the Fed was going to break this cycle. Something has to break every cycle. They seem to kind
Yeah,
of have recovered at this point. What are your thoughts?
yeah. Let me pull it up right now.
Mm-hmm.
Okay. So sorry, I'm just pulling it up.
Okay.
I mean, I've been loosely following the action in regions. It's actually been a pretty busy week for regional banks. So I've been loosely following because there's been a lot of headlines each day.
Yeah,
But I mean,
lots of earnings
yeah,
from
yep,
banks.
exactly. Yeah, a
Mm-hmm.
lot of them. So like Schwab and Western Alliance and PNC, MTB. I mean, I think even
Mm-hmm.
after the close today, there was another few. So
Mm-hmm.
I'm very, very busy, but I'm, you know, I, I'm not as well. I don't track all of the names as closely as I probably do to some of the larger banks, but
Mm-hmm.
I'd say on a whole that the numbers seem to be coming in better than feared, right? I mean, I think that'd be the
Right.
way to describe it, which I also think, I mean, through the chart of the KRE, that's kind of what it's showing, right? I mean, very strong, very, very strong 2-day move. And to me, right now it's beginning to break through. So from a purely technical standpoint, I mean, the KRE is beginning to break through the lower resistance that had been in place ever since the March collapse. So I think right now this earnings season has maybe removed some of the weight on the regional banks, and you're seeing some money come back in. And the KRE in particular looks pretty good after like a pretty sharp 2-day breakout. And I mean, assuming that it can, hold somewhere in the vicinity of where it is currently. I mean, it seems like there's probably a path higher from here. So, I mean, I think as a whole, it's been a better than better than expected week for regionals, and I think right now that the KRE appears to have some more room higher from here.
Ryan also asked, this question kind of relates to your daily process. So as I mentioned, you are a moderator in the Alpha Team virtual trading floor with T3 Live. That's alongside Scott Redler. So Ryan asked how you prep with Scott for things that you'd cover while he's not in the room and vice versa. So maybe walk
Yeah,
us through your normal daily process and then how that maybe changes when Scott's not there.
yeah. So a lot of my day begins in the pre-market, like similar to
Mm-hmm.
Scott. So what he likes to do is walk through a lot of charts. So he has like a basket, a pretty big basket of names he typically follows. So he
Yeah.
likes to do chart work, find relevant levels, know in advance what he's looking for, level wise, what the possible implications of that would be, right? What I do is very similar too. Like I do a lot of chart work looking for setups that are possibly close to triggering, or even ones that aren't close to triggering. I
Mm-hmm.
like to throw out a lot of like alerts. I'm very, very aggressive with like my alerts. So meaning like when a stock gets to a certain price point, I get like a pop-up notifying me of that, just because it's impossible to follow, a 100 or 200
Yeah.
different stocks at any given time. So I
Right.
rely on price alerts. So my pre-market and even post-market too, I'm often just filtering through charts, finding what stuff looks good, what would be the relevant levels, and doing price alerts. Also, because like I said, I mean, I do a lot of like news-based trading.
Mm-hmm. Yeah.
So I go through I go through like a bunch of different like news services. So I have a pay for news service, but then I mean I go check the earnings calendars. So like briefing.com or earnings whispers, like I go to both of those. I see who's reporting, or I see who just reported. Kind of
Mm-hmm.
read through the numbers. I check what analyst days are going on, just so I have like an idea of like throughout the session, right? What I'm, when does an analyst day begin? Because you might get like an event that begins at 1 p.m. in the afternoon. So
Right.
I like knowing about it, so I have like the stock up in front of me in case like something like some breaking headline comes out. Like,
Mm-hmm.
I'm not like scrambling around already. I'm kind of anticipating that some sort of news is going to be released.
Mm. Okay,
Yeah.
so let's talk about the best trade you've had this week and what made it go well.
Yeah. So the best trade was going back to that Monday biotech bonanza.
Mm-hmm.
I didn't share the chart with you, but I don't know if you could pull it up. But it was a small cap bio. It's called Acumen, ticker ABOS. So this past weekend was an Alzheimer's conference, and I knew that this company was releasing because they announced it about a month ago that they were going to be presenting initial proof of concept phase 1 data. So really early stage, small trial. So in biotech, typically like the size of the move happens in relation to the phase of the data, meaning that the earlier the stage, typically you get a smaller move because there's still so much. There's still so much that the biotech has to do to get to the point where they even get the drug in front of the FDA. So
Mm-hmm.
phase 1, you tend to think like smallest of the moves. Phase 2, slightly bigger, and then phase 3 is considered pivotal because if the trials is a success, you file with the FDA to get the drug approved and onto the market. So phase 1, you know, it's sometimes sometimes it can be a huge event. Most times it's slightly less of an event. But I figured this case, Alzheimer's, small cap, seemed kind of like a good story. So I took a shot on some options ahead of time. I was anticipating a run up into data, which kind of played out. Not really. However, I decided to hold the options through the data, and the stock was up at one point. I believe it was up. It was up over 100%, in off the open or in the pre-market on Monday. So that actually led to a really really nice open for me. So I was able to close those options for a pretty big win
In
early off the
addition,
open.
while we're on this topic, bios are a big thing for you in your trading.
Mhm.
You're an options specialist and then a bios specialist. Why does that sector interest you so much? Why is it something that you've decided to focus
Hmm.
on? And Yeah, why?
That's a great question. I'm not really sure. I probably started paying more attention to biotech as a sector maybe in like 2013, 2014 timeframe, maybe even a little bit earlier. I'd have to go back and see. Um, I think what was really fascinating was the science. So I don't have a biology degree, or I don't have any experience. I don't have any background in the medical field.
Right.
But I thought it was really, it was, to me, it was like just really fascinating, like reading like the backgrounds of some of the companies, what they were working on. And then I mean, from a trader's perspective, some of like the best moves on a day-to-day basis are biotech related, right? So, you come
Mm-hmm.
in and a stock is down 75% or it's up 100, 150%. So, when I see that, I'm like, oh man, I gotta get involved with this. So, what I guess what led me to it was just, the element of interest, what the companies were working on, and but then also like, how volatile the stocks were. And because I've focused on options, I mean, I believe for most people, one of the reasons why they avoid biotech is because of that risk, where they say like, I don't want to come in one day and have one of my positions like blow up on me.
Mm-hmm.
Well, I say like, okay, if I focus on trading options and I know what my risk is at any given point,
Mm-hmm.
that's something I'm comfortable with, right? Like I seek out the volatility. I'm not trying to like shy away from it. That's what I'm looking for. I'm looking to play the events where, you could potentially see a stock double overnight. So I think it was a combination of that. Um,
Mm-hmm.
and you know, you're being kind saying like, I'm a specialist in it, but I mean, I basically, I like following like a lot of like really smart, intelligent people on Twitter that share a lot of great information. Even in the VTF, there's a great community of people that love to trade biotech, that know a ton about it.
Mm-hmm.
So I think that's ultimately what it comes down to, is that, I like what these companies are working on, or I'm interested in it, but I also, I like how they move as stocks and how they set up as trade opportunities too,
Mm-hmm.
for on the option end.
Like you mentioned, those stocks can have those really large moves up or down,
Hmm.
and you use options to play them and manage your risk at the same time. Does that option strategy give, do you feel like it gives you and any trader who might want to also do the same, the ability to properly, oh my gosh, my question here, properly play those really volatile
Yeah.
stocks in a more safe manner?
Yeah. Yeah. So like you said, I mean, you're great with the wording. So it's not like a riskless manner, right? Like no
Right.
trade is ever riskless, but it gives
Mm-hmm.
you a risk defined strategy, which I think
Right.
is is just as important, right? Like if I know at any given point what the maximum amount of money I can lose in a trade, to me, like that's helpful, right? Because
Mm-hmm.
if I can consolidate the amount of my risk into like a specific number, then I can look at it and say, okay, this is something I'm comfortable with. Like reward, okay, you know it's not always easy to quantify the reward, because you don't know exactly what the data is going to be. You don't know what the movement is going to be. So you can't accurately say exactly what your reward is going to be, but at least I know my risk is, X amount. And if I can reasonably predict a move of, 2 to 3 that, or
Mm-hmm.
more, then like that's something I'm comfortable with, right? I'm risking one to make two, three, four, maybe even more if it's really phenomenal. So um and I mean, for those types of events, like, I wouldn't be selling premium, right? So like that's one of like the really important distinctions. It's like when I say option trading on bios, it's like, okay, I'm long contracts, so like those are debit based, meaning like my risk is the price I paid. Like I personally would not be selling premium, like shorting options into these. I do know some people like to short options, they like to short premium, because they like to collect the money and let the time value erode, implied volatility erode. I get it, right? it just, for biotech in particular, I think that is a more risky strategy, just because,
Hmm.
as we say, I mean, you could come into like a massive move. Sometimes it's easier to know when that move may be coming, but other times it's totally out of the blue. So yeah, so I just want to make that distinction. When I say I'm trading options, like these are debit based, meaning like I'm long, I mean, I'm long calls, I'm long puts, call spreads, put spreads, right? So I'm not shorting premium going into these events.
Hmm. Every trader I talk to who trades options talks about the same thing being, what your risk is defined. For someone who
Mhm.
maybe doesn't trade options and they're like, what, how is your risk defined? What does that mean? Explain it. What are you
Yeah,
risking
so
when you're long an options contract?
exactly. So Tesla, right? Let's just take Tesla as a hypothetical example, right? Say you think Tesla is going to go up, and you want to go long a call, so you purchase a call. I mean, it doesn't matter the strike, right? But say the call costs $3, right? So the
Hmm.
option multiplier is 100, so 3 times 100 is 300, right? So that's what out of pocket you're going to pay for that one call is $300, right?
Hmm.
At the end of the day, that's the max total you could lose. So
Right.
everything,
If it goes to zero,
if it
all
goes,
you're
if
losing is 300.
that's it, right? You paid three
Right.
hundred dollars. If it goes to zero, you lost $300, and you walk away, or maybe you try a different one, or you do something else, right? But
Hmm.
at the absolute end of the day, you know that there's no scenario where you're going to lose more than the amount you put into that contract. So, like for trading it, and options specifically, I mean, it's about quantifying your risk, right? When you get into a trade, okay, you want to know, what's my risk, what's my reward. So with options, again, I mean, like, exactly what you're risking. You're
Hmm.
risking is your price paid. So I think that's really attractive for a lot of people, is just because, okay. And the thing too is that, I think one of the other misconceptions with options is that people think, well, like, it doesn't work. Like, I don't want to keep losing like $300 in each of my calls. Well, like the thing I say too with like options is, like, not every contract is a hero or a zero, right? Like, not every trade is going to be a 2 or 3x, and not every trade is going to be a zero. Like, there's going to be a point within like the life of that trade where something may change, right? Like,
Hmm.
it might not be working. You would say, like, oh, like the reason I got into that call just isn't there, right? Like, it didn't break out. It's not going up, right? Whatever the reason is. And at the time, like, the call might be worth $1.50. It might be worth $1. So there's nothing making you stay in the option until expiration. So if at some point along like the life of the trade, like the narrative changes and you want to get out, I mean, more often than not, you can get out and salvage some money. So, I think that's one of the biggest misconceptions, is that everybody's like, oh, like, it's a lotto ticket. I'm going to hold it to zero. It's either going to work or it's not going to work. It's like, well, there's also the in between where
Yeah.
it maybe it's not working, and it's just like, whatever reason you were in it in the first place isn't there any longer. So, like, why are you still there, right? So
Hmm.
that's what I tell people. It's like, there you don't have to, everything doesn't have to be a zero or home run. I mean, there's in between too.
Totally. All right. Mhm. Oh, we just got a question right here at the end. Perfect. Vincent asked, with student loans coming back into play in August/September, do you think that can have an effect on the market directly or indirectly, i.e., less retail spending affecting earnings or less retail trading in general?
I think it may. Yeah. I mean, I was curious to know, and we do sometimes get like published statistics from different like sell side shops
Hmm.
about the retail participation in the equity markets, and I feel like it's been ticking back up. So I know, I think that was one of the things in 2020, 2021, when people were stuck at home and they had extra money, whether it was because of stimulus, or like not having to pay like student loans, is that we saw like the participation in a lot of like meme stocks, or like crypto, right? We saw those really take off. So I think it's a great question, and I wonder if it's going to have a similar impact, but on the reverse, right? Like, are we going to see and especially now that we've had such a resurgence in a lot of like meme and crypto and kind
Mm-hmm.
of like, like momentum type names. Like I wonder if it is going to have like a similar impact just on the opposite side, where if some of that money starts to come out, is it going to be like that group or that like basket of names which get hit? I mean, I don't want to say disproportionately hard, but do they start to lose some of their luster, right? Do they start to lose some of the momentum? Because that seems to be the basket that people gravitate to most in like, a lot of like the retail areas. I mean, it's also
Yeah.
the big names too, right? So it's like the Apples and the Teslas and the Nvidias and whatnot. But I mean, as a whole, I mean, I feel like the amount of money we're talking about isn't going to impact them to the same extent as it would like something that's like a smaller cap name, like
Yeah.
like a Mara or AMC or something along those lines.
Mm-hmm. All right. Well, we've hit our 1 hour mark. Sorry. So I think we can close out here. Thanks for this discussion, Dan. I think this was a great discussion about options and earnings. Good luck this earnings season for
Thank
you
you.
and
Thank
in
you.
your trading and the week ahead. We're only halfway through the week. For everyone
Mhm.
watching, I did just put a comment in for our next event. That will be next Tuesday, not next Wednesday. So this will be on Tuesday with Ben Kahn, who is a professional trader with T3 Trading Group, a popular podcast host as well. So that'll be a good discussion. So join us, register
Yeah.
there at that link I put in the chat. See you all next week. And Dan, thank you for joining me today.
Thanks for having me. Have a great week.
You too.